Welcome back, fellow investors. Today we're going to dive into a very intriguing topic that has been on the mind of all of us as investors. And I say all of us because I too am an investor, and at some point in time, it was a question that was on my mind. I would ask, is the market going to crash? I would always ask myself, what is it that I have to look out for so that I am not caught up in the middle of a crash if it should ever happen? So today we're going to talk about the things that you should look out for so that you are not going to get caught up in that crash if and when it should happen. And the reason why I am sharing this information with you is so that you can feel more comfortable to make smarter choices, smarter decisions, and you can ensure that your assets are protected, even if you are still getting advice from someone else. So let's grab our notepads and start to take notes, because this is going to be one session that you will love to have the notes for, even though you can watch it again. My name is Lerato Lekena-Okoro, and I'm a real estate broker based in Lagos, Nigeria, where I help clients and investors like you, like us, to make smarter and better decisions so that they're able to use their real estate investments to create a wealth portfolio that they are proud of. To understand the potential of a real estate market crash, there are a number of factors that would either start to happen or would already have happened or be happening, which would serve as signs, those markers that say, this is about to happen. Yes, when those things are happening, possibility is that you will not be able to rush out because real estate is not so liquid as we would like it to be. However, you would at least be prepared, and you can either buttress or basically put some cushion into what it is that your assets were supposedly funding, paying for, or helping you to get done, so that at least when the crash happens and the effects or the impacts of the crash do come on, you would at least not be crumbling under the weight of that. And the first point that you would have to look out for would be the economic fundamentals. First and foremost, in as much as we want to assume that real estate is an industry on its own, it is always going to be a component of the entire spectrum of the health of our economy. So what is our economy doing? Yes, things may be so expensive, things may get so unaffordable. Inflation may hit that it makes it so uncomfortable for people to be able to afford the basic necessities, of which housing is one of them. But if you are going to be looking at a real estate market crash, then it would mean that the economic health of the economy would be so bad that people cannot buy real estate as an investment or otherwise in any way, shape, or form. When things like that start to happen and you are finding that it is less and less viable for people to invest in real estate, that is one of the signals that a crash could be coming on. And you will want to protect yourself in one way or the other, either by ensuring that the properties that you already have tenants in, you can at least come to some form of long-term agreement that ensures that at least some form of money is still coming in. It might not be the actual amount that you had projected or that you are already earning or gaining from your investment at this current point in time, but at least you will ensure that you are still earning something. Yes, the value of the property may fluctuate at that point in time, because in any situation, the value of an asset would always rely on what it is that the market is willing to pay for it, the demand for it. So if in that case demand is lower because people just know that they can't, then the value of your asset may fluctuate at that point in time. So that will also not be a time where you want to go and leverage or mortgage your property to help you to release equity in it, where you'd be getting some financing. The second factor that you would have to look out for, and which also for our market, that's the Nigerian market, would be a positive sign that the market is not going to crash, is the fact that our population is mostly young. Statistics tell us that we have almost 50% of our current population being under the age of 18, which means that we also have a very large group of our population that are currently moving into the work stage, which also means that they are starting to need properties or housing of their own, which means that demand for housing is growing. Now, what happens in a situation like that is the fact that the type of housing that would be in demand will change, not the fact that there is a housing demand. Statistics have again shown us that there is still, despite inflation, despite the rising cost of living, despite all the instances that we can think of as relates to our money, to the fact that people are still looking for either housing, or they're looking for office spaces, or they're looking for places to do business. So if you are an investor who's looking to go into real estate as an investment, then you should be open-minded enough to think not only of housing, but also of office spaces or social or recreational centers or relaxation centers, or even just social amenities, because all of these facilities are things that will continue to make money. So if you are then going to think, oh, I do not want to go into housing, maybe because you say, oh, that's where everybody is, or the majority of the investors are in, you can think about commercial spaces. And to be honest, that is a very interesting and lucrative piece of market right now. Now, you may wonder, what role does infrastructure play in whether it is that our real estate market is going to crash? Infrastructure helps to enable the further migration of housing or real estate services that rely on people, because industrialization, urbanization would always factor in. Another example would be the fact that Lagos and Nigeria as a whole is currently experiencing a shift where people are moving from less urban cities into more urban cities in search of greener pastures. Greener pastures would include things like getting better jobs or better paying jobs, or generally just living a better life that, that they envisage that they will be able to get in these urban cities. Now, if you are also going to consider that, you would also realize that people don't want to live when they come into the urban cities in places that make them feel like it's a village. So if you're going to think about it, you want to look out for where are the places that there is that shift in urbanization, in infrastructural development. Where are the places that, services, general services that, like roads, hospital setups, like co-location of internet. Like internet has become one of the very key things that people look out for when they're going into a space. Imagine that, because we have a lot of people who are digital right now. We're literally living in a digital economy. People are making money through digital means. Everybody's going to rely on internet. So if internet services are also not good or not available, then they would definitely impact on how it is that people would request or demand for properties in that area. So once you can continue to see that services like this are continually expanding, growing, and moving out into various locations, then that also is another sign that yes, that the market is not crashing. You are still on track to being able to keep earning from your real estate portfolio. Now, point number 4 is one that I particularly like. Why? Because it talks, or it leverages or premises on market corrections. Now, there have been instances where people have presumed and put a certain value on what it is that their portfolios or their real estate or their assets or their investments or their services are worth. And what we now see happening is that the market is helping to correct these prices. In instances where these prices are overinflated, as I would like to say, or they have been hyped, we then start to see a scenario where just because they want to be able to stay in business, they are willing to negotiate on what that value is. Now, that value or the power of the negotiation for what that value would end up being is going to be strongly dependent on the approach or the situation or the circumstances that the person would be. However, we are seeing market corrections as something that are currently happening and will definitely happen, especially when there is going to be a market crash. Now, Does that mean that every market correction means that there is a market crash? No. A popular example of a market correction that you may want to look out for would be where people are literally dumping their real estate assets to get whatever amount it is that they can get. So you could probably see a property of 60 million then being totally crashed, and they say, oh, I just want to get out and I'm going to put it on the market for 35 million, where nothing is wrong with it. There are no preconditions that are causing for that type of negotiation to be arrived at. Then those are more of the instances where you can say, okay, yes, a crash is happening. But where regular negotiation would come up, where a certain price can be agreed upon, but on certain conditions, then that wouldn't necessarily be a market correction. That would just be a seller who is looking to stay ahead of the market and ensure that they are at least remaining in business for the current situation and duration that they currently are in. To enable you as an investor to get a comprehensive view of whether the market is going to crash, don't listen to just one person. Listen to an array of opinions. Listen to an array, especially of experts who are either able to give you their opinions that are backed by data, or they are backed by circumstance that is current. I'll give you an example. A few years ago, we kept hearing how, oh, properties are going to crash, especially during the pandemic. People were like, market is going to crash. People are going to be looking for how to dump their assets. Why? Because they need money. Yes, people will need money at any given point in time. But whether people are then dumping their assets because they need money and people are willing to negotiate for what the cost or the value of their properties are would be a different thing. So I would always suggest, recommend, and advocate that you look for a variety of opinions and you find a way that you would be able to balance them out. For example, I'm a real estate advocate. If you want to be able to make an informed decision, take my real estate advice, find a financial advisor who would also tell you what the market is doing, what your chances are, and what the possibilities are in terms of earnings, and also look for the opinions, especially of a legal advisor. Now, I particularly like the mix of the three of us as advisors to an investor. Why? Because it helps to give you a balanced overview or a balanced outlay of what it is that you should be looking to, what it is that you should be looking for, and what it is that you should be looking to do it, so that when you are then going to make a decision, because the final decision lies with you, you are going to be making it with a broader understanding of what is, what can be, and what is coming for you. So in conclusion, whilst the real estate market, just like any market or any asset, has its own inherent risks that apply, the overall perspective is definitely much more positive than we may like to think about. In cases where you are thinking that you would need to protect yourself, then understanding what risks it is that you stand to face when you start investing, or you actually have an asset that you've invested in, would help you to make a more informed decision or meditative action towards your investment. If you are one person who says, oh, you have this asset and you were only looking to a certain line of action for how it is that you use it, you could then be looking for options so that you do not just have one source or one funnel for your asset making money for you, but you are able to have multiple options that you can pull into play. Being able to have these options may just as well protect you from falling under the bus if the bus should hit, in terms of the market crashing or inflation overkilling what your projections are, but at least you would be protected. And while all of these factors are important for you to know, you also have to remember that investing in real estate requires for you to be able to have done your due diligence, your careful analysis, and have a very strong understanding of what it is that the market needs and not just wants. All of which would help you to not be swayed just by perspective or side talks or unbacked inferences that should or would scare somebody who is not informed in terms of what it is that they're trying to do or the market that it is that they're playing in. So there you have my opinions, my perspective, and my answer on whether the real estate market in Nigeria is going to crash. Short answer for me would be a no. However, if you want to be able to make the decision by yourself, which is your right to do so, I would suggest that you go through each of the factors that I have outlined and do the analysis for yourself. Think about the different factors, factor them in terms of what it is that you want to be able to achieve, the things that you would like your real estate to be able to do for you, and see so that you yourself can basically make that decision of, do you want to get in or do you want to get out? And if you do get in, at what point do you get out to ensure that you are not caught up in anything unbecoming, as the case may be. Now, till next time, when another episode is going to drop, happy investing.